Hello traders, this is my Friday evening video, and some themes I'm going to talk about here. We had some sell-offs in the technology space, in the semiconductor space, and some of the consumer discretionary space today. It's not too bad yet, but things are starting to look a lot worse, okay? But at any rate, this is a chart that I've been showing for months now. And here we are going into the 1st of January, and the computer technology and the internet space typically, seasonality wise, sells off those in that month, the 1st of January. So now if you look at these other charts, now if you go on stock charts, your XCI, which is number one index that's supposed to sell off next month, you can see today we broke the upper distribution today and closed below it. So the next stop is the 1857 area, so there's plenty of room to go lower. This is computer technology. The second one that broke was your internet stock. I don't have the ticker listed on that graph, but this one here gives you a close comparison. It's the Dow Jones Internet Index, and as you can see today, we've been trading along this 50-day moving average, and we clearly broke away from it today in a real tight wedge on the daily. So keep this in mind here. This is your Googles, Facebooks, Netflixes, Teslas, well, maybe not Tesla, but your FANG stocks for the most part. They were showing relative weakness today. You need to keep your consumer discretionary on the radar too. We came off the higher highs, and today we are testing the prior high breakout level. Another area that really got sold off today was your semiconductor index. And I still have NVIDIA, and I plan on holding it for a while. But at any rate, we had this accelerated upper distribution, and we're coming down like a rock right now. There was a little gap that we even filled today, and we closed lower. So I'm thinking there's quite a bit more room to the downside, to at least the 880 area, something like that. Now, as you can imagine, that put a lot of pressure on the NASDAQ today. And if you notice, the CompQ, which is the composite, it actually broke down from the upper distribution too. And yesterday I posted on my chart that we were crossing that uptrend line. So we broke the uptrend officially now. Now, if you look at your NDX, it's clearly looking worse. That's your top 100 NASDAQ stocks, and that's your Apple, Amazon, Google, and it was selling off even harder. So, yeah, it didn't even stop down here at support. It blew right through. A couple other index charts I want to talk about is your industrials. Today we came down, and we are retesting this upper distribution. So if we get any continuation Monday, we've already crossed out of the uptrend itself, but we are testing the bottom part of the range. Now your S&P 500 did manage to, this accelerated uptrend we've been in, it managed to hold that today and pretty much close hold this upper distribution. So keep that. We could get a bounce Tuesday. I'm not looking for it, but we could, okay? And your top S&P 500 companies, they did tend to perform a little bit better than the overall index, the S&P 100, because it didn't come down in tag trend yet. Some sectors I'm still focused on are the airlines. We were still getting call activity in JetBlue today, but I'm still a little bit bearish on the airlines. We're holding this upper distribution, and we are right on the 20 SMA as of now. So if we were to happen to get some bad storms or some further continuation in the crude, which I think we're going to get, I'm thinking the airline's going to break the first steer. NVIDIA is an individual stock, which I still own. I do see with the stocks showing so much weakness and there's room to fall, I'm thinking NVIDIA is going to come back down to its 20 SMA before we actually get any type of sustained buying. That's around $100, and that makes sense considering the parabolic move it's had. And keep in mind, the S&P 500 has had a 3-box reversal on the PNF chart. and that is a revert. That's a warning that it's reverting lower. Now, if you look in the XCI index, which is supposed to be the leader to the downside, the biggest holding in that index is Google, and of course that's the FANG stock that fell the biggest today. And I was in it. I told everybody about it yesterday. Whenever it was closed below, it closed outside of consolidation yesterday. I got in, and it broke the 20 SMA with a vengeance today. Another chart on my watch. I haven't entered yet. I want to get a confirmation Tuesday, but if we start seeing any more weakness in Netflix, I'm going to be going short on this one too. Yeah, just 2 days ago, people were so bullish on Apple, and we're at the 61.8 fib extension with a double top. This is, this is almost always a short candidate, and everybody's talking about us going over 120. Well, guess what? I don't think it's going to happen. And we keep getting one bad news article after another. Plus, Trump's going to be going after China, and so that's not going to be good for Apple either. So, I'm going to look to re-enter Apple down around 106 if I can get it. Facebook's one of the next weakest on the FANG stocks. It's been in a sideways consolidation for a while now and wedging out. And typically, in a bullish pattern, this would be a bullish formation for a bounce higher. But it all depends on how the markets go. Right now you're wedging out to infinitum. There's no more room to go. So that to me typically resolves for a break lower. And we've come down in below this trend line before for short periods, but I'm thinking that's what we're setting up for. I'm going to stop this video on Amazon, and today we are still below the 20 SMA on Amazon, retesting the 50% fib fan. Okay, plus trend support. So all of us know Amazon's going to have good stuff, but keep in mind, this time last year, the first part of the year, Amazon lost 100 points. And we know the internet and the technology stocks are going to most likely take a hit the first of the year. And Amazon's probably going to go with it. So I could see Amazon, if you come down to this other fib line, that's this right through here. If you go first 2-3 weeks of January, you're going to be right down this lower fib line, and that's 100 points. And then a bounce higher. And that's going to be the prior highs. So that's all I got to say, and something to think about, and be very careful on your longs.